But Dom Chu, I know we've got Market Navigator. You're a money guy. NASDAQ turning around. S&P, it is not impossible the S&P ends today higher.
No, it's not, because if it stays right where it is, it would have bounced right off. It went below its 200-day moving average, its longer-term trend line, and then the dip buyers just came in force, by the way. So it's been a rocky couple of days for sure, Brian. Our next guest says that there are ways to actually play the market a little bit more defensively, rally aside here, to tell us how to shield your investments when the markets do sell off the way they did earlier and may still in the coming hour and a half. Joining us now is Tony Zhang, the chief strategist over at Options Play. Tony, I maybe just let's get your thoughts first of all. The Qs, the NASDAQ QQQ ETF, went down to like $488 and even less by a few pennies and has rallied all the way back up to $500. It looked ominous at one point. It doesn't look so now. What does this tell you about the market?
Well, I still think that the fact that we rallied back up to that $500 level is still concerning, because what effectively we've done is we've broken below a major support level, that $500 support level. We traded all the way down to, as you say, to 488. And right now we're just back up to that resistance level. If we can't get back above 500, that is still concerning for me going forward. And that's why I do think it makes sense for investors, especially if you want to remain fully invested in your portfolio for dividend reasons or for tax reasons, to potentially take a look at buying some protection plays at this moment. Protection is a little bit more expensive than it was a couple of weeks ago, but I think that right now you can still structure it using options to buy yourself some protection in a cost-effective manner to protect yourself at least for the next roughly 10% downside on the Qs.
All right, so Tony, then let's talk about the structure of that insurance. How exactly do you do it? Do you just buy the put protection outright, or can you cheapen it up a little bit with some maybe costs associated with that?
Yeah, that's exactly what I want to do, because if you outright just go out and buy the puts, and I was looking out to the May expiration, which gives you a little over 2 months of time. If you look at buying the May 490 puts, these are puts that are just slightly out of the money from where we are right now. That's going to cost you a little over $15 right now. That's more than 3% of the ETF's value. In my opinion, that's a lot to give up in terms of upside to buy that 10% downside protection over the next 3 months or so. So I think the best way to play this is to look at kind of where the next level of support looks like on the Qs, and for me that looks like around 450 or so. So what I'm going to do is I'm going to sell the 450 puts against that in May as well, and you're going to collect a little over $6 on that, and that brings your total cost of that put vertical spread to just a little over $9 per share, or $900 per contract. So now you're reducing the overall cost of buying this protection from a little over 3% now to below 2% of the ETF's value. And I think that's a much more cost-efficient way, a much more capital-efficient way to buy yourself downside protection over the next few months, because I don't think that if we do get a sell-off here, we're going to be meaningfully below 450 or so. And that's why I think this is the right trade structure for right now, even though it is a little bit more expensive to buy protection than it was a few weeks ago. But I think now is the right time, because now is the time where you feel you really need potential protection. But before, when it hadn't broke below 500, I didn't think the need for buying protection was as necessary.
All right, so last thought here. Does the price action today make you think a little bit differently about the potential for upside in the coming weeks, not just the downside protection that you're guarding against right now?
Absolutely, especially since the both SPY, QQQ are holding some major support levels at this moment. But especially even NVIDIA holding 115, I think is incredibly important. And I think from my perspective, looking at sector rotation, I think that the chances of a meaningful decline here is less as of after today.
All right, Tony Zhang, Options Play. Thank you very much. We'll see you again soon, sir.